Hello everybody. So today I'll be reading my gold trades for today. Uh, it started around uh, XNES broker time. I was on the market from like 2 a.m. This is XNES broker time. I think it is UTC 0. So we can see a large bear trend over here, and I'll show you all the trades that I took, and I will explain you what you can do. Since it is a large bear trend and it is a micro channel by the way, and this is a first reversal up, so this will be minor. You can sell it, but I have not still not entered the trade. So uh, if I go there and okay, yes, I have not entered the trade anything. I have not done anything. I let the market run for a while. Now as you can see, it was trying to form a double bottom. There was a 3 bar bull channel, so I thought that it will at least get a 1 hour. So I scalped out 1 hour over here. I s- I, I entered around 20 to 30% of my position and exited with a profit over here. And after that, I also sold the no, I didn't got 1 hour. I exited on this bar. I exited on this bar and I sold 50% of my position. Sold the market at over here. The reason I sold the market is it's the first bull bar after. So let me turn off some sound first. It's a first bull bar after it has more than 20 bar below EMA. So all the bulls will think that this is a minor reversal, and they will try to sell the close. So this was the reaction of this bear bar. I was still holding because the minimum target the bulls were trying to achieve is low of this or open of this bull bar, and it has not reached over there. As you can see here, I bought around here and closed over here, and I had sold over. I had a limit order placed. I didn't sold the close because I had to go down. So I had a limit order placed. The limit order placed was based on this concept, like this. I had a limit order placed over here, and after that it went up. But I was very confident that it was a minor reversal, and the market will at least test the low. So I here, as you can see, that many bears sold the close, but market immediately reversed up, and the bears that sold the close were not able to get out from the market, not even 50% pullback. As you can see, the bear that sold on this bar, it rallied up. They again scaled in, but they could not get out break even. So many bears are trapped out here. So that makes it more uh, like a probability that the market will test its bottom at least over here. So and I eventually exited here. I eventually exited there. I guess where did I exit? Okay, so I exited. I exited closing partials, partial and partial. I exited over here. After that, now if you see, we can draw it's a wedge. But now let me go more. Now this, but this is a micro bear channel, so it's not good to buy the first entry short. So I was waiting for some confirmation, and now I see that it's a good looking bull bar, and it engulfs this candle, and it's a second entry short. I'm a maximum stop order buy, but I thought that this was a great bear micro channel, so I think I bought around 50% of my position at the midpoint of this candle. And the interesting thing that I will tell you is there was no entry for stop order bulls. Any bulls who has put their order 1 pip above this candle never got filled because it was a bear bar. There was a bull bar, I had a 50% position on over here. I bought the 50% position. I had a stop order of 50% position and 50% limit order, but my 50% order didn't got executed. Now it was again a good bull bar. I think I put 25% of my position on stop order, but it didn't got executed. Now I started thinking uh, the market is going up, but the stop order bulls were not able to make profit. So it is very unlikely the market will rally very much higher. So I started drawing a trend line over here, and if I show you something, the bulls that bought here were trapped because it was a micro channel. It was one leg up down. It was a second entry high to buy, but and they could not get out break even. So it this zone acts as a resistance, not only now, and this zone acts as a profit target zone. But here are no trap bulls, by the way. The reason being, after a bear bar and a series of bear bar, the bulls that bought here were able to get out on this bar. As you can see, this is the tail of this bar. So the first target was there, but I was very hesitating because stop order bulls were not able to get entry into the market. So I thought, here is buy the close bulls. Mm. Here is buy the close bulls. So they must try to make 1 hour. So what I did was I put my target profit at 1 hour of this buy the close bulls. It is still not executed, and mm, because I had put my target initially here, but after seeing this, now I put my target at 1 hour of this buy the close bulls, and as you can see, it went up and my target got reached. Now if you can see, it's a wedge. It's a three push already. One push, two push, and a third push, and it's a micro channel, but the candles are very much big. So the thing that can happen, or I was anticipating that it's a good bull trend, but because bears were here is a bull bar and here is a bear bar, but bears are unable to go below the bull bar. Here is a bull bar and bears are unable to go below the bear bar. So uh, it may be big up big down confusion and a trading range. So market may go up down like that. So but bulls are also strong, bears are also strong. So I was waiting for, if I get a good entry sell, I was willing to sell it. uh, and I have sold many over here. As you can see, I sold here, and I was selling many position. I sold two position. Mm. Now I got a great bear bar. So what I did was, in the 50%, I put my 50% position sale. I always put little bit below. So I got my trade got exactly executed, and I put another 25% at a stop order below to sell. Now, after seeing this pair bar, not only that, I put another 25% remaining to sell at midpoint, but it did not got executed. So I have 75% of my position in, and I saw it is a follow through. I was thinking bulls were strong. They might get 2 hour of this range because they are having a good follow through. But I thought that they may get a double bottom and get up because this is a strong rally. So I thought it is good to exit at 1 hour. So I all exited at 1 hour, as you can see here. Some I took partial profit at this zone, and other I took profit at this zone. Now, this was a first increase short. An interesting thing I'll tell you, another thing is, here is a wedge. It's a it's a spike and a channel in 1 minute time frame. It's a breakout and a channel. So if it is a channel, it has a 75% of chance that it will test it pullback range. So if you can consider this as a pullback starting, so there is a high percent chance that uh, market may pull that. So thinking that I put a 25% limit buy order here, but I thought that it's not good to risk trading on 1 minute, because Albrook says if you are trading 5 minutes, stick to that. So I again decided to get out break even, and I was able to get out break even. So I didn't took the trade. Now the analysis, different analysis. It's a pullback channel on 1 minute time frame. It goes up, it comes down, and it goes up. So what you can see is it's a channel up, down, up. It's a micro double bottom. So what I did was I put 25% stop order at above this bull bar, and 25% stop order below this around low of this bull bar. As you can see here, I had a stop order. It got executed here, and I had another 25%. 25% buy order was here. 25% buy order was here, and it got executed. Now this was a waste, and it could not get out. So the bears could try to get out 2R. So I was hoping that I was thinking, and here was two level of resistance. If you can see here, here is the resistance of the wedge, and here is a resistance of 2R. So I was thinking that bears will finally able to get 2R. So they got it, and it got a it was a beautiful bull candle by the bulls. But I didn't entered a stop order above this, because um, it was a very high selling pressure from the bulls. And instead what I did was I put a limit order to get out break even between these two trades that I have initially taken. But what I saw was, now this was a good candle. It's a micro double bottom, so I cancelled break even of these two trades. Instead, what I did was I tried to put to get out break even on the first trade, and I stopped on the I cancelled the target profit of the second trade. Now the market went up. I exited break even on this trade, and my initial trade was running. The limit order trade over here, this trade was running. And what I did was, instead after that I drew the 50% mark. I entered more 50% position over here, because it was a great breakout. It was a trend line breakout from the bulls. So I entered 50% position, and here bulls have done something, and it's an expanding triangle in a larger context. So I bought 50%, it got executed, and I thought this was a great looking bull bar. The remaining 25% position I am in here, 50% position I am in here, and 25% position I entered buy stop above this bull bar. As you can see, above this bull bar, this is the one. Now, now I started taking partial profits of this 50% position over somewhere over here. In the remaining, I took all the profit at this zone. But this trade was still running, and I was thinking that there was open gaps over here, so market could rally. And there was gap over here also, between this high and between this low. So two gaps are very powerful, and market could, and it's an expanding triangle. If you see, the expanding triangle are lower low major trend reversal, one push, two push, three push, good strength from the bull side, and lower low major trend reversal, it could go up. So I will never hold a entire position. So around 75% position I exited all over here, over here. Now this was a great interesting bull bar. So I thought that the market could go for a measured move up to here, or turning back on. There are many trapped bulls over here also. As you can see, the market could go up also. So, but this was a great looking bear bar. So I put I don't know what it is called, limit order below this bear bar to get out break even, to get out on a profit. If market comes down, I'll get out get out on all trades. So market came down and it went up. So I exited all the trades. Now seeing this bull bar, I thought that I should again enter on the trade. So what I did was, since bears are trapped here, since bears sell the close, bears were trapped here, I put a limit order to buy over a little bit above. I and I got executed over there. But what I saw was, after this bear bar, now I came little bit forward up to this green bar. It was an triangle. It was a triangle. So it was a L high one buy over here. So market, there was a high possibility to go up. But this bar, bear sold the close. When after the bull bar ended, they sold the close. And I was thinking, why did this happen? There was like gaps, two gaps, there were open gaps, and bears sold the close. This should not happen in a bullish environment. So I was thinking, what wrong went, why did bulls were not able to counter this? So I thought, if bears could get a follow through, I'll get out break even, and bears got follow through. So I put my entry price to break even, and I got out break even. Now I thought, up until now I was pretty sure that market was going to up. But if it was a small bear bar and a bull bar, the market was still valid, that this was a final flag, and market could go up. But now this thing made me realize that uh, it's a trading range, I guess, because it's a up down, and I was confused what was market doing. So I thought it's a trading range. So what you do in a trading range is buy low, sell high, scalp. So you could buy here and get out. After that, I drew a trend line, and I was putting a buy stop order to buy around here, but it never got executed. Market went up, but the interesting thing is, I had put 25% sell position at this high, and it got executed. But I thought I was getting very tired, and I said, okay, let's get out break even, and I ultimately see market ultimately came out, because as you can see the position, I got out break even. I didn't do nothing. So as I told you, it was the current market is, it's up down. So bears should sell this. They sold this. And the interesting thing that I'll tell you is, the bears that sold the close here, now they will try to bring the market down. They will, at least, since the bears that sold over here and again sold over here, now the market is here. The sell the close bulls will trade like this. They will sell here, they will put a limit order, sell here, they will put a limit order, sell here. If they see a follow through bar, they will try to get a 1 hour. Like 1 hour will be like this. They will try to make the market go up to here. But market reversed against their favor. Now they might try to get out break even. The market reached here, but they could not get out break even. Now their new sell limit order was executed over here, and as you can see, selling here, selling here, selling here, the break even price is just here, and they got out break even. But the strong bulls who believed after this the market could come out, they may hold up to here to get out break even at first trade, or they may try to get full 1 hour. Okay, so this will act as a resistance. So I am not ready from this moment.